We have today with us once again Alan Lim, and this is the second installation of the HQ Financial Planning Conversation, Alan Lim Exclusive. This session, we're going to start with this item, okay? So, um, where Alan actually sent this to me a few, about last week, okay, about the Singapore government, right, being prepared to draw further on the reserves, and we have done that a few times in a very short uh, period of time, okay, due to COVID. And so let me pass this to Alan now. So Alan, welcome once again to the estate planning. Sorry, it's not estate planning, to the financial planning conversation. Right? Yeah, we did the estate planning conversation a couple of years back, right? And you were one of the keynote speaker as well.
Thank you.
Over to
All
you.
right.
Very happy to have you with us once again, Alan.
Thank you. Thank you, Samuel. I like the term Samuel talked about being relevant to the financial advisor. In fact, I serve in the Financial Practitioner Association, the Insurance and Financial Practitioner Association of Singapore. I serve as a EXCO member as well as vice president for the education and training. As a leader, I have to, write memos to them. Last night's memo was actually I wrote to them my working com. I said that in the future it's not about how good you are, it's about how relevant you are in the market. All right, because just yesterday I think one of the noted shopping mall in Singapore, Robinson, decided to be liquidated after 160 years of history. So Robinson was a good shopping mall, or rather a shopping center, departmental store you can call it. But because they can't cope with the changes, they can't reinvent themselves quick enough, they become irrelevant. All right. So it's a warning to us, lah. All right. It's a wake up call to us as financial advisor. All right. Yeah. Now, thanks Samuel also for sharing the trends. I'm very passionate about sharing the trends to financial advisors. Because I firmly believe as a professional financial advisor, we cannot divorce ourselves away from the trends in the country that we serve. All right. We serve in Singapore. We practice our trade in Singapore, and therefore we have to understand the trends that's affecting Singapore, both from the demographic, family, which is matrimonial, economic, and geopolitics situation. All right. If you don't understand all these things, and then you just practice just selling an insurance product, doing estate planning, sometimes you might go off the mark. All right. So it's very important. Now, I shared with Samuel that particular article 2 weeks back. It's about Singapore. Now, I always have this challenge to any financial advisors that went through the Chartered Financial Consulting course, which are very deeply into it, both as a lecturer and also an assessor in some of the topics. I always ask him, okay, as a financial advisor, if you're given 5 minutes to introduce Singapore, say you're in an international conference, you're given 5 minutes, the host asks you to introduce Singapore to the entire audience, and you're given 5 minutes, what would you say? Now, the reason why I say throw this to financial advisors is because I want to begin to make them understand. Do they really understand what Singapore is? Over and above the food that we have and the shopping area that we have in Singapore. We go deep, no? All right? Because Singapore is a country that is not supposed to exist in the first place. All right? We got no natural resources. We are such a small countries. All right? The only saving grace that we are by God's grace, we are geographically located in certain part of the
so that is actually map, like the only natural resource that we have, right?
Yes, correct. But since independent until now, I think one very important situation which is to Singapore favor is that we accumulated a vast reserve. A vast reserve meaning what? We don't have natural resources. Our human population is also quite limited. A vast reserve is actually to back up our Singapore currency. All right. Because of the stability of currency, over time, Singapore become one of the wealth management hub. In fact, Singapore will rank top 3 in the volume of foreign exchange transacted through Singapore. All right. You can read that in history books of Singapore. All right. It's been documented in Lee Kuan Yew's memoir, and some of the earlier politicians, they wrote their stories. All right. Now, you might ask, hey, Alan, are you going too far? No, I am a financial advisor. Why should I need to know that? I just want to counter ask all financial advisors in Singapore. Why does a foreign high net worth individual in Shanghai or Jakarta or or Ho Chi Minh, a tycoon in Ho Chi Minh, want to park their money in Singapore.
Mm.
Singapore so nice, man. I mean, the food in Singapore is so good, man. I mean, Singapore life is so comfortable, man. All right. I use a little bit of Singlish because we're talking about Singapore.
Yeah,
all right.
Yeah. Please feel free. Let's be ourselves.
From the financial planning perspective, from the wealth management perspective, it's got for three main reasons. Why the foreign fund flow into Singapore? Stability of currency, a respect of the rule of law, meaning if there's any dispute, you go to the Singapore court, you'll get a fair judgment quite faster. All right. And the third part is the stability of governance. All right. That particular political party in terms of the stability of governing the country. All right, whether you like it or not. That's how foreigners see that. All right. Now, these three factors, if you compare that with our neighboring country, Malaysia, Indonesia, Vietnam, Myanmar, Thailand, all right, you will know that we are still way ahead. But though they are catching up, especially Thailand. All right, but we are still way ahead. It is these three factors that cause a foreign fund serious money to come to Singapore from wealth management side. Of course, if you are a civil servant or if you are a politician, you can see from another side of the coin where serious money is coming to Singapore for investments, to set up factory, to set up a business HQ. So that in return set up produce jobs, you see, which is very important.
Yeah.
Now, when I share with Samuel that particular article, is that Singapore got a very unique way of managing our currency, very unique way, which will cause some pain to all of us. Our $10 note inside the wallet or the $100 inside your POXB account, all right, we are the few countries in the world that our currency is fully backed by assets. It's not easy, That means your currency, your $100 worth of bank account inside your POSB is 100% backed by assets. Consists of what? Predominantly gold, equity, foreign treasury bills. 100% backed.
So not all currencies are that way.
No. In this part of the world, most currencies are actually floated. For instance, like Thailand, all right, United States. There are only in Asian country, there are only two main countries in which the short seller, those currency short seller, they will never attack because they sure lose on. All right, one is Singapore, one is China, which is I'm talking about renminbi. It's only these two countries that our currency is fully backed by assets. Now there's a price to pay if you want to adopt that strategy. First of all, why do we want to adopt that strategy? Because the overall strategy is for survival. Your currency will be stable so that you give confidence. All right, you give confidence for foreign countries to trade with you, and it's very important. All right, and I just reading the newspaper while waiting for this session to be up. I tend to read past year's papers as part of my research. There was an article about Singapore, how much trade passed through Singapore, the Singapore port. Now, close to 90% of our food is imported.
Okay.
All right. Close to quite huge amount. I think 80-70% of the things that we use the electronics and whatsoever. All right. Are from imported as well. And very importantly, I think 99% of our energy, like the LNG, or the gas are also imported.
Okay.
Now, meaning to say Singapore is a country that buy things from other people. When you buy things from other people, your currency has to be strong. The moment your currency is weak, in exchange to United States dollar, which is a main trading currency, it is very difficult. Now, for the matter, even our water, we need to purchase from our neighboring country.
Yeah.
Therefore, to have a stable currency is a matter of survival. Not something.
Because you're not self-sustenance in that sense.
Yes, correct. Now, how do you make sure that your currency is stable and give international community the confidence? You dare to show that, hey, my currency is backed by asset. If anything happen, I can take this asset, I pay you. All right. So now, of course, this strategy is good for trading, for survival, and bring Singapore to what it is today. But it also has got certain price that we pay. This resulted that everything in Singapore is very expensive. Even you park a car somewhere down Orchard Road, it might cost you $10, $20, $30. Everything you have to pay. All right. There is no free lunch. Unlike country in Brunei, when if you hold a yellow IC, you're a Bruneian. Your medical is free. Your children education is free. Everything is free. Singapore, no. Everything you got to pay. All right. So there are pros and cons to this. Now, because the currency is stable, that's why you got people come inside Singapore and set up shops. You get foreign fund come to Singapore to park, all right, so that the wealth management industry can be vibrant, and that translate into business for financial advisors. All right. So that's important. But the question to ask, Alan, okay, you talk like that. So what's the link to the article? That article is very important as a wake-up call to all of us as financial advisors because it's got implication on the
share
way.
the screen.
You share the screen? What is this now? Now, DPM, which is you talk about this one, government prepared to propose a further draw on reserve. I repeat, to propose further draw on reserve if necessary. I respect people in the government. I might not necessarily agree with them, but I respect them because it's not easy to run a country. It's not easy to run a country. You got to take care of the foreign affairs, you take care of defense, take care of the custom. Not easy. All right. It is not just about the neighboring mosquito in your drain or your neighbor upstairs is making noise in the night. It is more than that. Okay. Now when you draw up a reserve, our reserve is used to back our currency. Now, how much reserve Singapore have? I mean, you can search on data. There are three institutions that manage our reserve. Only one of the institutions you can't get the data on the internet because it's secret. Primarily because it's a private limited company now, so not necessary for them to publish their data. Okay. And that entity is GIC. Now, GIC data you can only estimate, but you can't really get the exact figure. That we put one side. Temasek, you can find it on the internet. You can just log it onto it. You can find that Temasek asset under management is about 300 billion Sing dollars. Used to be slightly more because of COVID-19, the thing dropped a bit. The third institution is MAS. MAS also run part of the reserve, which is another 300 billion in that amount. So 300 plus 300 about 600. Temasek, GIC, you estimate is about maybe about 500-600 billion estimate All right. So Singapore total reserve about 1 trillion plus, maybe close to 2 trillion. All right. And that's what we have now. Now you can say that this one is not small, but this one is also not big, not that fantastically big, So therefore, it has to be managed very carefully. Now, COVID-19 is a very serious situation. It can cause the very existence of Singapore to be no more. They call it as there's a term for it. I can't really pronounce it. Yeah. Now,
existential risk.
Existential, correct. Existential risk.
Yeah.
Now, because you can see the very first time Singapore government actually dig out a lot of reserve just to keep the economy going, or just to pay its citizen. For the very first time, I think some of you're hearing this, you benefited. You got the $9,000. If you're self-employed, your income is not more than 70,000 last year, right? Or 100,000, I think 100,000, not more than 100,000, that kind of thing. You actually get cash, or total $9,000 inside your bank account. Never happened before, no. In the past, when government say want to help, sometimes they do the thing that you can see cannot touch one. They may top up your CPF, your MediSave, that kind of situation, give you voucher. This time around, they give cash. No? Meaning to say the situation really serious. No?
Yep.
All right. So therefore, when you take out your reserve to do this kind of thing, which is good. I mean, you're helping the citizen, which is good. I must confess it is good. Okay.
It's a no choice thing at the same time, isn't it?
Yeah, correct. But the thing is,
no choice. Yeah.
Yes. But you take a look, from a logical point of view, there's a pot there. You take out the money to do things, you got to put it back on. No? For instance, it happened in 2008, 2009, the global financial crisis, where the late President Nader approved $5 billion to draw out from the reserve to help the local economy. And within few years, our government actually pay it back. No? Now, the government has got no obligation to put it back, but they make it a discipline, a financial discipline to put it back.
Yeah, which is very good. Yeah.
They did it. So this time round, just within 2020 is not end yet. No, there are so many series of budget, a special budget that is being announced, is being committed. Close to 100 billion, I think, 100 billion. Now, this money is taken out. Now, you take a look, just how Samuel talked about it, COVID-19, when is it going to end? Nobody knows, no. If you go down to 3, 4, 5 years, we can't find the vaccine. And it's going to be a problem about our economy. Then if your economy not vibrant, the foreigners are not coming in, or the foreigner Singapore is going out, You got no much economic activity here. Where are you going to get the revenue from tax? I mean, corporate tax, all right, the personal income tax, the fee that you collect from custom and all those things, the duties, the trade duties, all right, the goods duties that you import duties that you collect. These are revenue. Where are you going to get all this in to put it back into the pot? So if you can't put it back in the pot, and then for a long period of time, you might face a no choice situation, but bring to the parliament to say that, hey, I think maybe it's about time that we cannot sustain that kind of strategy that our currency is backed by asset. Because no more asset or insufficient asset.
Yep.
Now, coupled with the situation that Singapore is an aging society, when a lot of reserve yet again is being taken out to back your MediShield Life, your long-term care policy, they call CareShield Life, some of your CPF Life, that kind of things. So you consume more than you put in. And over a certain long period of time, there might come a situation in which the ruler of that day, the government of that day will say that, hey, sorry, we can't continue to have this one. We just had to float our currency. That means your currency is not backed by assets, not 100% by assets. So in that situation, if the international community has got no much confidence on Singapore, which could be 20, 30 years down the road, and then your currency lose value, your inflation will shoot up, then it will be a problem. Then it will be a big problem.
So in a sense, life as it's going to be in 20, 30 years time, nobody really knows.
Yes.
1 year
Correct.
ago, nobody could imagine this is how COVID looks like, right? It looks like a Netflix movie more than not, right?
Correct.
Right? So therefore, if you can't see what's going to happen 20, 30 years down the road, right? Which we have totally now we look back, right? Why Lee Kuan Yew do not want to have a monument established?
Yeah.
It might become irrelevant in 100 years time, 200 years time, right? You refuse to have it. But
yes, correct.
Back to this, you can't even foresee how 30 years is going to look like. Then what is the strategy to plan for that, right?
I think the situation,
retirement planning then. Correct.
In fact, I shared an article more to have a conversation on retirement planning. Now, retirement planning, we plan the time 20, 30 years, 10, 20 years of time horizon. I think it's time to about the financial advisor to go back to the client, start to review your 20-year retirement figure, the one that every month you need $5,000 a month, or the future value figure, use time value a month, calculate 7,000. Maybe you need to adjust down a little bit. All right. That's one. That means that you lower down your retirement accumulation goal.
Okay.
Perhaps maybe you want to extend your retirement age that you wanted to be, extend it. Okay. Number two. And number three, if you could, I say if you could, all right, if you got sufficient asset, try to diversify a little bit to other currency on your assets. For instance, I give you an example. If your CPF, your HCB, your insurance policy, everything is in Sing dollars. If Sing dollars ever work against you or not as good as what you thought it to be, then life can be very difficult. So therefore, let's not write off too much about some insurance product that is denominated in renminbi. All right, or some insurance product that denominated in the United States dollar. All right. So just diversify a bit. I'm not saying that US dollar is the champion one or renminbi is the best. It's not that. We are seeing from the asset allocation point of view. Number two, and number three, or maybe the fourth factor is that for retirement planning is 20, 30 years. If you have got plan that 20, 30 years, this place called Singapore is not the same as it is today. You want to give some financial assets or what I call financial bullets for your children or your grandchildren to seek permanent residency or citizenship in another country if this place don't work. I'm talking about 10, 20, 30 years down the road. That means it's your children or your grandchildren. If you want to give some financial bullet for them to prepare for that situation, then you could start to think, okay, what's a country that I might want to send my grandchildren or children to? Maybe I had a nice time in Australia. I studied there. I think it's a country not bad for permanent residency.
Yep.
Maybe from today, I need to rebalance my asset allocation, that some part of it in Australian dollar. There are insurance policy denominated in Australian dollar. You can choose the currency one. All right. There are also certain funds you can say based in that particular country's currency.
Yeah.
All right. It's
So
the same thing.
it seems like from what you're saying, right, in terms of contingency, a lot of people seems to think very much local, right? Singapore, everything Singapore, right? Singapore is going to last for 1,000 years, right? We don't know. We hope it does, right?
Yeah, we hope it does, but it might not be.
And then now the conversation has like gone beyond Singapore.
Yes.
Yeah, you have to think about contingencies is outside Singapore, even, right?
Yes, correct.
So it's true. Even today, because I'm a PR in Australia, business is in Singapore. Before COVID, I travel both places every month, right?
Yeah.
So because my wife, she works here, she managed to get a PR, right? But right after she got a PR, the rules changed. Now it's a lot harder to get a PR over here, and
certainly.
all these. And this one brings about the conversation about geopolitics, right? Because how government over here make their decision it has a lot to do with how the entire global geopolitical climate is like as well. Am I right?
Yeah, correct.
And this is interesting because remember last year for HQ, we 2 years ago we started the estate planning conversation, right? So last year was the second installation. We invited one gentleman, Professor Ding, right?
Correct.
He's now in Singapore, but when he was very young, obviously he was a high flyer. He used to report to Deng Xiaoping, right? And as an intelligence officer, right? And then he gave us a very good overview about the geopolitical situation. But when that happened during that time, people were asking me, why did you invite Dr. Ding to talk about that? What has that got to do with estate planning? And of course, we believe it has got to do with that, right? And then immediately after that, right, the US-China trade war escalated. Okay, and then we start to feel the impact, right? Now, I want to ask you, Alan, right?
Yes.
From today, right, onwards, right? How important is geopolitics and for financial planners to be really having a good grasp at, right? How important is this now, today?
I think it's it just give an analogy. I think it's very important for anybody to have a good understanding of your own family finances, your own what's the actual financial situation of your own family, and then you extend that to a country, the country where you live in. You have to have a good understanding of the very country's financial situation, so that you have a realistic expectation of why certain policies, certain decisions are made in certain ways. Now, why do I say that? You have to have a very mature outlook. For instance, as a financial advisor, you have to be very confident and highlight to the client what is in terms of the kind of returns that you can expect from an insurance policy or from a portfolio of a unit trust or a portfolio of an ILP. You have to have that confidence. Now, I'll give you an example. Why is it important? You have to understand Singapore. Singapore has got no natural resources. There's nothing underground. No matter how you dig, there's nothing underground. All right, so there's nothing you can dig out to sell. So it only depends on services. You only depends on the reserve or financial services, all right, or international trade, or even right now maybe pharmaceutical or maybe IT. All right. Now the thing is, you have to understand that situation. Then you will know that for Singapore to be wanted to be a wealth management or financial hub, the lending rate, the prime lending rate of the bank, or rather we call it interest rate, set by the central bank, which is MAS, then translate down to all the banks, will not be very high one, because you want to attract people to come to Singapore to trade. So your lending rate cannot be high. So the prime lending rate in Singapore probably about 5.25. The prime lending rate, let me explain what is that. It is an interest rate a bank will lend to its best customer. All right. Prime lending rate, not mortgage rate. Mortgage, because it's got the property come inside as a collateral, so of course it's 2% or lower or 1%. We are talking about prime lending rate. Then I lend to you without any security. Prime lending rate. Now 5.25. 5.25. Okay. Now when I say best customer, it's not an individual. Best customer usually is an institution. All right, it's not an individual. It got to be huge. 5. So therefore, as an individual, when you borrow, it's prime plus 3, prime plus 4. Correct? That's around the kind of interest rate. That's a part. Now, as 5.25 meaning to say, your long-term return from any asset, guaranteed return or stable return, will not be higher than 5.25. You don't believe? You check it out in Singapore, in terms of stable long-term guarantee rate of return product, what are they? Are they higher than 5.25? I challenge you to go and find. You can't find. I think that the more you look, you can only come to one conclusion with CPS special account, 4%. That one guaranteed by statute, 4%. You will never be more than 5.25 no. Because it cannot be. Because if you can have a product that's more than 5.25 consistently over a long period of time, that person no need to work. No, he will borrow money from the bank at 5.25, go and put into your product, say 8% guaranteed one. All right. He made 8%, he returned 5.25 back to the bank, he made that 2.3% risk-free. And that's actually happened in the Asian financial crisis. It happened in Indonesia. It first started off because of the US rate is like higher than the domestic prime lending rate.
Okay.
So the whole economy collapsed. Nobody want to work. Why should I need to work? All right. I just borrow. I make the return, risk-free return. So why do I need to work? So that cannot be happen from the economic point of view. So the whole thing will collapse, the economy. So in Singapore situation, in the long term, the returns are 3%, 2%. All right. That is the one that the client must be able to accept. You can't artificially tell the client, hey, my IRP policy 8% or 9% or wow, this one. Cannot talk like that. You must talk a basis. What basis? Your basis has to be in some data that's credible to your country. In order to know that, you have to understand, you're going to study and then have the way that you can update yourself. So you can tell the client, hey, you can't compare your policy with your father's policy purchased 40 years ago. In those days, 6% can. In those days, what is the bank prime lending rate? Maybe 8-9% mortgage rate. In those days, fixed deposit can be 5%. But today, fixed deposit rate is how many? 1%, 0.5%, or maybe you're a senior citizen, they give you 1.2%, something extra. That's it. So therefore, in today's, the return on product that is relatively stable return one. Maybe about 3%, 2%. Now then come into the next situation in which recently I got a huge argument with some financial advisor. They say, hey, Alan, you better don't say this in public because your position, if you say this in public, you have backslash by financial advisor, throw you out of your EPAS position or whatever. But let me tell you. So if your long-term returns is about 3% one, your endowment policy returns after 20 years if you net off inflation, could the internal rate of return, what we call the IRR of your endowment policy, be actually negative? That means the return, say the yield is say 2%, 3%. That one you can find it in your benefit illustration. You show the client, this product very good. In the long term, guarantee 2-3%. And then your client counter asks you, no, Alan, 2 to 3% this one. If I adjusted the way with the inflation, we call inflation adjusted rate of return. If I adjusted rate, is it actually negative? So as a financial advisor, what do you say? Do you sugarcoat it? Do you behave like a salesman, handling an objection? Wow, I say other thing make you happy.
Yeah, but
as a professional, you just have to say the truth, which is
because the clients themselves are very educated these days. It's not the same as
of course
years ago, right?
Yes, of course. Meaning to say that
some of these topics they could even know more things than us, right?
Yes, but the thing is, yes, from the inflation point of view, it could be endowment policy is negative. Yield what you call negative IRR interior is negative Yes, Mr. Client, this is a fact. I'm professional. I'm telling you the fact. You net off inflation, say 3%. Your yield is 2%. Is negative. But the thing is, there are other areas you can look at endowment plan besides the return. Number one, the inflation. This one is an so-called an artificial figure that we use for planning parameter.
Yeah, the real.
If it's negative.
Because
if you put money inside the bank, it's also negative inflation. But why are you still put money in the bank? So therefore, you bear with it because of certainty of the capital. Because your endowment, at that kind of risk, the return is like that. All right. Number two, And number three, you could as an advisor start to educate client on the other aspects of an endowment policy, perhaps. Right? So this is an endowment policy, this is an insurance policy. You can ring-fence it from creditor by making it a trust nomination, what we call the S49L nomination. So if you got bankrupt or whatever, at least this education fund is protected.
So
example.
So
you got to
yes, Alan, I backtrack a little bit, right? So now the thing is this, okay, if the client were to ask you or to challenge you in this way, right? If the financial planner is not knowledgeable enough, you can't even justify, or it's not justified. In fact, if it's a fact, it's a fact. You tell the client that it's a fact, right? The client is not oblivious to the environment as well. They know what's going on in the economy, right? Not. But if you are knowledgeable enough to tell me the fact, and that is the way it is, I think in return, I will appreciate you even more, isn't it?
And of course.
And I will regard you more as a trusted financial planner rather than if you sugarcoat it, I will still find out from other people. I just do a bit of research, I will find out myself, right? Doesn't sound quite right. Okay.
In fact, most
most
endowment policy is actually if you factor in inflation, especially the longer period one, it's actually negative returns. But that doesn't mean you lose money, It's just that your money after adjusted away from inflation is a little bit negative. But that's a risk that you take because that policy is rather stable.
But then again, inflation is a moving target at the same time.
It is. Therefore, you need to diversify. You cannot put all into it. You want all secure one, guarantee one, then you will have a problem, you see. So the financial advisor must be very confident in saying this. And don't sugarcoat, you see. Because I think, Samuel, you come across some, they really got to give or the get. They can sugarcoat it so convincingly that you believe
policies from financial planners. It's like when you're talking to them, I want to buy from you, right? After 2 weeks, you wonder what happened to you. It's like you are mesmerized by this guy, right? He can talk so well. But that's beside the point. I think over here,
yes,
we are dealing with very, very real topics, and I think as financial advisor, if you ask me, right, I would want my, the users of HQ, right, to be this kind of aspiring financial planners, because these are the ones that's going to continue to be relevant in the future. I honestly believe in that. Okay. And so all these things trace back to, of course, the understanding of the Singapore and the economy and the geopolitics that's affecting us and all that, right? Now, correct. Alan, okay. We want to do a case study, right? We're halfway through our 1 hour mark. Okay.
I see. Okay.
And of course, if let's say our viewers have a request, right? Alan, can we ask Alan a little bit more about this and that, right? We're going to take a deeper dive. We will do that in the next sessions.
Okay, right? No problem. Okay.
Okay. So today, right, we have a very interesting case study coming up, isn't it? So
yes, it's in the area of debt management. In the area of debt management.
Cool. I'm gonna back to you again, Alan. Feel free to share the screen.
I need to share screen. Is there?
Yes, you can do that anytime. Yeah.
I just do a share screen,
Sure.
I just do a share screen. Okay. Yes. Now, when Samuel approached me to do this, I think let's do it something that financial advisor can take away something, walk away with something tangible, right?
Yeah.
Now, there's this area which is very seldom people touch on. Whether you do CHFC when you're doing CFP or some of the professional designation, it's in the area of debt management, all right? But debt management is very, very important because if you mismanage it, you can become bankrupt, and then your whole financial situation can collapse. And let's be very real about this one. If you find that your spouse is a bankrupt, usually the husband and wife relationship will not be as good. Let's be very real about this one.
Yeah.
Okay. Yeah. As a man, perhaps you will lose a respect as a provider in your family, and the intimacy between you and your wife is most of the time no longer there because the lady of the house don't respect you. Problem. All right. So therefore, I don't like to see family split as a result of finances. So just pay some attention to it, especially that I certainly do not want that the wife being accidentally bankrupt by the husband, which can happen. No? I shall show you the case study. All right. Now we're talking in the area of contingent liabilities.
Okay.
Now, what are contingent liabilities? when you see the word contingent, meaning to say, when you do your normal fact finding with your client,
Yep.
all right, contingent liability is that figures that will not show up in the current balance sheet or statement of net worth that you do your normal fact finding with your client. Meaning you say that, hey, sir, what is your asset? What is your liability? He tell you those are existing liability, existing assets.
Alan, just to interject a little bit, right? Now, a lot of wives, okay, right? And why I think this is important for financial advisors, right? When you sit down with families, especially your client could be the wife of some businessman, right?
Yes.
I think a lot of women, their husband are doing business, but they may not really know what the husband is doing, right?
Yeah.
Of course, the husband don't come back telling the wife everything.
Yes, correct.
Right. So I think it becomes beneficial if, let's say, financial planners can, if they know that this is a situation, right? They can actually share about things like that and to raise the awareness for the wife.
Yes.
Isn't it? Right?
Correct. Yeah. No, it can be skillfully done. I mean, I've done this many times before. I got this high net worth couple. Both of them are who's who in Singapore. All right. Both the wife is also a very powerful commercial lady in the commercial sector in Singapore. The husband equally good, if not slightly better. He's a CEO of a listed company. Now both of them actually they love each other, but they don't share their financial information with each other.
Yeah.
All right. It just happens to be like that. They're couples like that. There's nothing wrong with that. They love each other. All right. So the wife just tell me, Alan, can you go and do a financial planning with my husband? Can you just let him know that I don't need to know what he has, what his liability. All I need to know is that if he die, if he don't leave any money to me, it's okay because I can earn myself. I also got property of my own. But what I do not want, if he die, he left behind debts that I have to
just don't drag her down.
Yes. I think it's quite a fair statement, no?
Yeah.
So the same thing I can tell the husband.
But at least she's knowledgeable enough to raise this with you, isn't it?
Correct. Yeah, she do. So they do financial planning individually, separately and individually. Right. So both keep their financial statements, which is a very fair statement. So therefore, take a look at this part here. Don't get bankrupt accidentally. There's a why. The what is most debts, if you got two or more person borrowing the money under the same securities, like a property, both husband and wife are jointly and severally liable. I will show you the implication. Now, in June 2020, this particular court case came out. OCBC versus Lim Sor Choo. All right. And if you go in Google Lim Sor Choo, you will find that she's a noted property agent in Singapore. All right. I think she makes serious money in a property transaction, landed property primarily. Okay. And OCBC, we know what OCBC is. All right. So in this situation, it's a case that husband accidentally bankrupt the wife. Now, I use the word accidentally with confidence. I don't think any husband dare to deliberately bankrupt their wife. All right. Usually accidental one. Yeah. In this case, 131 million US. It's 131. No joke. No, it's not $131. No, 131 million.
US dollar.
Yes, of course.
131 million.
Yes. Okay. Hey, Samuel. Let me counter ask you. If you accidentally got your wife responsible for 131 million, what will your wife do to you?
I don't dare to think I think 1,003 already got problem. We don't talk about million.
Okay. We got to be serious. High net worth. Okay, let's assume it's 1.3
of course,
million. Let's assume you got your wife. Liable. That means that the bank will send the letter of demand to your wife. No.
Yeah.
For 1.3 million. Yeah. What will your wife do to you?
The thing is that it's scary because I don't know.
Yes.
Yeah.
Yes. It's haywire. No. Now, therefore, let's look at it in the diagram form now. It's a judgment delivered by JC Judicial Commissioner. All right. Jeta Singh Gill on the 4th June 2020. You see the heart there. Lim Sor Choo and the husband. All right. They are a loving couple. All right. They love each other. The Mr. Tan Sing Hua is also he's actually a tycoon, a very low profile tycoon. All right. He run oil trading business in Hong Kong. And he's responsible in Hong Kong, in China, in that part of the world.
Right.
He's a controlling shareholder as well as director of Coastal Oil, which is in HongOng.
Okay.
The director and controlling shareholders. Of course, he also the key man. All right. So Lim Sor Choo and Mr. Tan, they like a landed property. They like a landed property in 2011. So in 2011, they seek a mortgage loan of 2.7. They borrow money 2.7 million from OCBC Singapore. OC Singapore. I think very common, no? Now, Madam Lim and Mr. Tan, they are high net worth couple. So 2.7 million to them is nothing on. They can well afford the mortgage, correct? They use leverage to buy a house, nothing wrong with that, correct? Yeah. But they did not know that that particular mortgage document that they signed is contain this clause called, you can see the emphasis there, all money open mortgage. All money open mortgage. Later I'll explain the significance of that. Let's continue the story.
Yeah.
So Mr. Tan in 2016, notice the date is very important. 2011 to took a loan of 2.7 million from a bank, OCBC Singapore.
Yep.
And 2016, Mr. Tan went to OCBC Hong Kong, also part of OCBC, the same bank. The same bank. Okay. And borrowed 131 million US for a facility loan for his oil trading business. Now, in the oil trading business, if you do big, the 131 million is very common one. All right. Okay. All right. But after that, the oil price started collapsing and then the business collapsed. All right. If you Google about Mr. Tan Seng Hoa, you also found that the company actually did some not so good things. So get investigated by the Hong Kong authority and things like that. Okay. So things happen. So Mr. Tan also gave a personal guarantor for the 131 million because he's a controlling shareholder and director of the company. Right. So he can't pay back. So of course the bank pulled back the 131 million when the business is collapsing. So Mr. Tan become cannot pay. So he become a bankrupt. Okay. Now the situation right now, everybody understand. Hey Alan, this one very straightforward. Mr. Tan take personal guarantor, take the loan from the bank. He's a personal guarantor. He can't pay. Bank go after him. He can't pay. He bankrupt. This one everybody know.
Yeah.
Now what is surprising is OCBC go after Madam Lim, no? OCBC sue why to recover 131 million, no? Now let's pause for a moment and take a look at this diagram. If you are Madam Lim, do you feel something very funny? Initially, when I read this judgment, I also find it very funny. I can't take the logic, no. I can't understand.
It's like, what has that got to do with me?
Yes, yes, correct. Because you see, Madam Lim also fight back. Madam Lim say, hey, Mr. OCBC, hey, stand by. Number one, I am not a shareholder, neither am I a director, neither am I an employee of my husband's company, which is in Hong Kong. I am a noted property agent in Singapore. No, you can Google me, you can check my RAS tax return. I earn serious money on myself. All right?
Yep.
Yeah, I have nothing to do with my husband's business. Now, number one. Number two, when my husband signed this loan agreement with you in Hong Kong, though it's the same bank, but it's a Hong Kong branch one. I am not there, no. So he signed also, she don't consult me. I also not in the picture, no. All right. This one is factual. I can check the loan application and my name not there. I did not sign anything. Right. So right now, how come the whole 131 million become a problem? And now you come after me. What does it got to do with me? I am in Singapore. No? My husband in Hong Kong. No? Right. Incidentally, I also don't know where my husband is. If you know where he is, can you let me know where he is?
Seriously, okay.
Disappeared. So OCBC went to court. No. This is serious thing. 131 million. No 1.3 million. No. So Madam Lim said that, okay, if you want to pull back the 2.7 million loan, I pay you back. If they want, because I signed, okay, I agree that I am liable for 2.7. But the 131 million, why am I implicated? Wow. So initially, I also cannot understand the logic. So I passed this judgment to my good friend, lawyers. They said, hey, how come the judge make decision like that? Wow, my good friend explained to me, hey, Alan, from the legal side, got think like that. They explain to me the reasoning. Then I understand. I know what I didn't know, what I don't know. No. I thought I know, but this case really changed from my assumptions. No. All right. Now, what is the meaning of all money open mortgage?
Can I ask you one question here? all money open mortgage, right? In this case, she's implicated
Ah,
because she took jointly took a loan, right, with the husband, isn't it?
yeah, correct.
She's not
2011.
implicated because she's the wife. It's just because
No,
this joint loan.
yes, yes. It's not because she is the wife. Yeah, Samuel is correct. It's not because she's the wife. All right.
Yeah,
She can
okay.
be the
So,
she can be the
actually,
girlfriend. She can be the mother.
actually
Doesn't
that
matter.
got me thinking because it might be open to another kind of risk, right? So if
Yes.
as a business partner, let's say you and I are in business, right?
Yes.
We take a loan jointly with the bank
Mm.
for our
Mm.
business, okay?
Yes.
But you have another business which I may not know.
Yes.
Huh?
And
And this
and I
loan I
take-
take with you, for whatever
Yes.
reason, could also have this all money open mortgage, isn't it?
yes, correct.
Right.
It's
So
all money.
as a businessman, right, even if it's not buying a house, I take a loan with you, I also need to be damn careful about this, isn't it?
Yeah, of course. Of course.
Yeah.
Now, let me explain to you what is all money open mortgage. Open mortgage meaning to say this mortgage is not restricted to only the house. It can also indicate, this is important. It can also refer to the future loans that you're taking. Now, that's me
Future
thinking,
loan.
Yeah, future loan, how am I going to control? Let's for example, I and
Absolutely.
Samuel.
Absolutely.
Say I and Samuel, I and you, we all go into business.
Yeah.
We take a loan, say $1 million to set up certain computer system or what. So I and you, we know lah. But
Yeah.
how am I going to control Samuel in future? Say 3 years down the road, you take extra money, go and buy another house in Perth.
Yeah, it's
No.
untenable, right?
On the other hand, Samuel, you also can't control that. I take another
Absolutely.
money, go and buy another property from the same bank. They say it's from the same bank. From the
Okay.
same bank,
Has to be the
from the
Right,
same bank.
right.
All right. To go and buy another car or another whatever, you can't
and
control.
the bank don't give you notification like an app, right? Oh, ting,
Of
your
course.
partner is
Of course.
about to apply for another loan.
Yes, of course.
Yeah, they don't, right?
Yes, and what does all money means? All money means if you got whatever account unit trust savings deposit whatsoever in the same bank all right, okay, they have got the right to consolidate and net off from there. Okay. Now, so this all money open mortgage is a very important clause.
Is it something that has been like this all the time?
Yes.
Something that is new.
Yes, all the time. No. Initially, I thought something is new. Something is new to our knowledge, but the thing is, it's not new at all.
Okay.
So I did some research in the past. In fact, 10 years ago, 2010, the president of this the Association for the Banks Association Bank, she actually wrote back to the news because in 10 years ago, a similar case happened. So the other parties will get it. So they said that how can I that the bank you're cheating, right in the newspaper
The thing is this, this is absolutely scary because it don't have to be 130 million, you can be taking a loan for 130,000.
Yes.
And it could still be an all money open mortgage.
Yes, of course.
Right.
Of course. So therefore, the thing is, the situation right now, okay, let's go back to this court case. In the end, who wins?
Yeah.
We can talk all we want that we sympathize with Madam Lim. Ethically not supposed to be like that. Morally not supposed to be like that. But legally, she's implicated. She lost the court case.
Yep.
You can go and Google it. OCBC, I think the lawyer represent OCBC was one partnership. They also wrote a legal note on their website about this one. Why their client wins. The reasoning. All right. So therefore, 131 million. So 131 million, how to pay? We're all insurance industry. Let's assuming that Lim Sor Choo resigned from the property, become an insurance agent. And let's assume she is the TOT producer, make $1 million a year. TOT producer. How many years of TOT she need to make? She need to do in order to pay back 131 million. 131 years, no. And some more, the one is US dollar, no. If you convert to Sing, it's 1.8, 180 million, no. Is it how to pay? Sure die, what? So therefore, this situation is what we call that the husband accidentally bankrupt the wife.
I see.
And let's be very real about this. What do you think is the relationship between Madam Lim and Mr. Tan now? Is it still loving? We are not watching Korean movie, no. This is the real life situation, no. What's going to happen to them?
Yep.
I mean, so therefore, as a financial advisor, where do we come in? So therefore, we learn this information and we're going to be wiser in our own affairs.
This is actually a very, although it's the quantum of this story, 131 million, may sound like it's really huge, right? And some people might think, hey, well, my client is not in that segment, right? But like I said earlier, it could happen at different levels.
Okay. Let me show you another case. Similar case. Okay. Similar case. Yeah. Similar case. Okay. Similar case. Okay. UOB versus Trustee of the Nanyang Confucian Association. All right. The date you can see there, the date.
Yep.
Yeah. In 1st September 2007, this Nanyang Confucian Association, they say that, hey, it's time as an association we need our own property so we can run our own activity. So they spotted a shop house in Changi Road, near Torokurau there.
Okay.
It's called 329A Changi Road, cost 1 million. But as an association, they don't have the cash to purchase. So they gotten their EXCO member, the president, Mr. Kit Boon Leong, and the other two EXCO members. One is Mr. Kirk Keng Tong, the first name you see there, and then Mr. Ching Mui Hong. All are trustee for the Nanyang Confucian Association, as well as EXCO member.
Okay.
Use their name. And these three gentlemen are also who's who are quite well known in the Chinese business community. Right. Okay, they use the three of them, they applied for a overdraft. They also use up the overdraft to purchase the property. Okay. They apply and they use up the overdraft. And three of them apply together. So they are jointly and severally liable for the 700,000.
Right.
Okay. Yeah. Now, what happened? The story is like that. So, of course, the property is used as a collateral for the overdraft. Quite fair. So, in 30th of July or 2009, Mr. Kirk, one of the EXCO members died. Kentong died. Okay. His estate has a debt of 3.5 million guaranteed to him to UOB.
Again, the common denominator here is the same bank.
Same bank. The overdraft in 2007 also from UOB.
Yeah.
Right? So, this one, Mr. K on his own business account is also with UOB. So he's a controlling shareholder of his company called South Asia Textile Industry. And he died, he's a key man. The company actually go into liquidation following his death. Correct? Okay. So therefore he owed 3.5 million his estate. Right. Now, in 2011 October, when Nanyang Confucian Association fully paid back the 700,000, the surviving EXCO member, which is Mr. Kurt and Mr. Chin, told UOB that they want to redeem the property. Very common. But UOB replied that take back the property. That means I pay you finish already. So you
no more mortgage. No
more mortgage.
Fully owned by us.
Fully owned.
Yeah.
They take the title deed back. Okay. So UOB replied that they have to settle the 3.5 million loan incurred by estate on Mr. Kerr. Now, Samuel, now let's assume you're not your Mr. Kerr.
Yeah.
Let's assume you got that 3.5 million. Don't say don't have. Let's assume you have. Will you pay?
Of course not.
Yes. Of course not. If I am here, so I won't pay, man.
Yeah.
What does my buddy's loan, his estate loan, got to do with me?
Yep.
Number one.
And especially in this case,
yes,
the property already fully paid already.
Yeah, fully paid.
Even fully paid.
Yeah, fully paid. Now the thing is, and you see, the Nanyang Confucian Association has been faithfully paying the loan back to UOB. Gentlemen, they all.
Yeah.
So of course, Mr. K mentioned
fully paid still not yours, in this case.
No. Because why? They have signed an all money open mortgage in 2007 with UOB.
Okay. So
which also exactly the same, which also has implication on the future loan of what any one of them will take. In this case,
it's a very complex situation, right? The three person, right, go together, so-called, right, go and sleep together, right? Go into the same bed, right? They don't know hey, this is scary,
Of course, if they below the red box.
You don't know who else this guy sleep with before, right?
No, okay. I don't care what my buddies. I don't care who you sleep with, but don't implicate me. What does it got to do with me? You can go and sleep with all you want. I don't care. But you get me involved in the trouble, then it's not fair, ma.
Then okay, let me just stretch this a little bit, right? Okay, so it's because Mr. Kerr, right, in this case, have kaput and then he still owe, right?
Yes, still owe.
But even in this case, let's say they say UOB say no, you cannot redeem the property yet because you still owe 3.5 million because of Mr. Kerr. Am I right or not?
Yes.
Even at this stage, brother, the two surviving one, Mr. Chin, hey, the same situation can continue to, isn't it?
Yeah, of course.
1 year later, Mr. Chin go and take another loan.
And the Mr. Cake got to pay lah.
In other words, in this case, right, because they signed this loan to buy this property,
Yeah,
all three
yeah.
gentlemen, and including the Nanyang Confucian Association, right, become tied in a situation whereby perpetually
course.
for the
Yeah, of course.
the future for don't know how long.
Yes.
Then one fine day, maybe 2015, one fine day, right? They say,
Yes.
okay, let's say I pay back. Okay, we okay lah. I think we don't want to implicate Nanyang Confucian Association now. We
Don't know. Yeah,
I
okay.
pay back the 1.5 million loan, right?
Yeah.
Okay. Then UOB may say, sorry, you still cannot because you still owe me, 7 million because Mr.
correct.
Chin.
Yeah,
have
correct.
Another loan.
Correct. No. Because there's a legal explanation to that, which is have to do with understanding of the loan agreement clause. Because of the clause there on the red box. Number one is joint and several liabilities for all the three trustees. Number two is the all money open mortgage. Okay.
Absolutely, yeah.
Yeah.
So it's a situation that I just described. It's true, isn't it? Even beyond the 2011, right? This situation can still continue to perpetuate for the surviving two trustees.
Yes, of course.
Right?
Yes. Therefore, what's the implication to us as financial advisor? How do we apply this knowledge? Number one, when your client are businessmen, they have relationship with one bank. Now, usually client have relationship with one or two banks because the bank understand their financial situation. It's also easy for them to get a business loan very fast because as a businessman, I want to have credit facility fast to run my business. So sometimes it's a risk I could take about the future loan. But the issue.
Okay, sorry. Yeah. Go ahead. I have a question.
Later. So therefore, if you can't control that, maybe you need to ring fence some of your assets or some of your family members out from your potential business liability. That's number one. And number two, right now, when I first entered the industry 22 years ago, buy policy, I could use cash to buy one. In recent time, buy big policy, don't need to use cash one. The bank will lend you money. It's called premium financing. The moment you include debt into this
equation,
you better be careful, because you borrow money, you got to pay back on. Similar thing when your client take a premium financing loan to buy a policy from you. It's not a bad strategy, so that you make sure the client can afford this thing. Actually, sometimes the return is higher because they're using leverage. But the thing we're talking about the risk perspective, you have to highlight to the client that for this loan, say taken from say DBS Bank or RHB Bank, can you in future don't take this loan from the same bank. That means you concentrate this bank is only for this policy. You don't go and take further money to buy car, take further money to buy property. Because
this is the kind of thing that financial advisor can
advise
the client.
Yes.
Right?
Because when you do a premium financing, your policy rights is assigned to the bank. The sum assured say it's $2 million. The bank has got every right to net off this 2 million sum assured with its future loans. You understand what I mean? With future loan.
So this kind of thing is not only right when we are talking about business or association, right? Husband and wife, one party is in business, loan, immediately you will be subjected to a risk like that.
Yes, correct.
Now, what I wanted to ask you is this: I would assume this all money open mortgage, right? Probably a standard practice across the bank in Singapore.
Yeah, it is. They say the common clause.
Overseas bank as well. I won't see.
Yes.
I don't see a reason why not. Right? No. This is important because these days, right? Because of the global economy, right? People do business with different people in different countries, right? Not
correct.
Right. Correct. I know who you sleep with in Singapore. I don't know who you sleep with in Philippines. The whole thing can exponentially have got this very complex situation, isn't it?
Correct. So this is what I mean by contingent liability. What contingent liability means to say that it is not so clear cut that you can see it up front like that,
Yeah.
If you're aware of something happening, you see always like that one, that kind of situation. So as a financial advisor, we got to be very sharp and very confident. Highlight, okay, maybe you need to set up a trust to ring fence some of your family members' assets, just in case business liability can cross-contaminate. You might think that your business run very well, but you assign all this contract, this all money open mortgage, joint and several liabilities with your business partner. How can you be very certain in terms of financial discipline? Your business partner can perpetually be. I also perpetually know.
I think this knowledge is very
Yes.
important. It has a lot of implication.
Of
right?
course.
In other words, let me stretch this a little bit.
Hmm.
I have 3 daughters.
Yes.
We watch Korean movie. Everybody want their daughter to marry to a rich man's son.
Yes.
Right, right.
Yes.
Hey, then better advise my daughter to understand all these things, right?
Of course.
We better advise our children to also know this kind of thing, right? Because they could marry into a family, could be exposed to all this kind of thing, right?
Correct. Now let's go back to the Madam Lim's diagram. What could have done? What could have done? Let's assuming that Madam Lim has got an advisor who understands this situation. And in 2015 or 2014 whatsoever, all right, explain to Madam Lim as well as Mr. Tan. Tell Mr. Tan, hey sir, you're going to take out some 131 million. Can you take with another bank? Don't take with the same bank. At least your wife will not be implicated for this 131 million. Your wife and you as well is implicated for the 2.7 million because that one is spare, then you need the money to buy your house.
There's quite a limitation to that as well, isn't it? Right? Yeah, in Germany it's different. There's a lot of community banks, hundreds of them, right? Or maybe thousands of them, right? Singapore only how many banks are, right?
No. I mean, someone is in Hong Kong, you can get DBS, the Hang,
of course. But what I'm saying
UOB or RHB or what.
As business expand, as things become more complex, right? We go into all different kinds of deals with different people.
Yeah, of course.
There's only this number of banks you probably work with, right? Not.
Yeah, correct.
So yes, this advice is good, This advice is good, but there is a certain how scalable is this is another question.
Correct. So the risk exists. Now, as mentioned, I think 1 month ago I read an article quite good. They talk about what is the role of a risk manager. They're talking about the risk manager. So very good. A risk manager is not somebody who can eliminate the risk. A risk manager is somebody or a risk professional, somebody who can identify and quantify the risk and prepare for it if the worst case situation happens. I think that's a very good description. Now, as an insurance advisor, financial advisor, our role is not to eliminate the risk. We can't. Who are we to eliminate
the risk manager being the financial advisor?
Yes. Right? But as a financial advisor, we can run through certain scenario, worst case scenario, and start to do something before the risk actually hits. In this situation, Mr. Tan and Madam Lim, they kena already, then what you want to do? You wait until like that. 131 million, how are you going to pay?
You can't be discharged, right? So difficult.
Very difficult.
Quantum is
so whether the wife can continue as a property agent, which is her passion, her profession, also remain to be seen. I also don't know. All right. All I know that as a financial advisor in Bangkok, I cannot practice anymore. Problem. So can I impact on future income also?
Yeah.
So this situation in which her retirement plan, her whatever bank investment plan also collects. Who also collects.
So Alan, I think this topic is a triggering topic. It can lead to other conversations, right? The way I see it, right? So guys, okay, I think we have come up to the 1 hour mark already. All right.
Okay,
so these sessions are not meant to be, it's definitely a deeper dive compared to the normal conversations we have.
Yes.
Right. But it's not meant to be that kind of deep dive. That is, the session will be like 3 to 5 hours. Alan basically is the kind of person that gives this kind of a training and all that, right? Okay. So now part of these so-called prelude sessions, right, it's going to lead to HQ subscription, a professional level subscription, right, in the future, whereby as a subscriber to that level, okay, you'll be able to access all these deep dives by Alan every month. Okay, so this is to give you guys a heads up on the longer plans of why we are doing this. Okay, so now, Alan, let me share my screen. Can?
Yeah. Okay. Sure. Yeah. I just stop share.
Yeah, as we wrap up today. Okay, Yeah. So, getting back to what you shared with us the last time, okay. Let me description. Right. Okay. The trends affecting you. Okay.
Mm.
Yeah. Okay, so I see that you. Okay, we are. Okay. This was shared with us the last time, right? And this was September, right? I understand you have a more updated copy with this, okay?
Yes, correct.
Yeah.
The latest figure on Singapore household asset and debts.
Yes. Okay. So actually, one of the things that struck my attention, okay, because there are a lot of advisors in the industry that come from the younger generation, the millennials or even younger. Am I right? And one of the things we want also is to benefit this group of people. They may not be serving, people with, clients with already married with three children and all that, right? They are at a stage where their clients are probably, these individuals who are aspiring, right, to be there, right? And I remember in the last session you actually shared about one of the project that you actually was working with the government, right, with the youth and all that, right? And they actually expressed their concern and fears, right?
Yeah, correct.
And what struck me was ownership of property, okay.
Yes, correct.
And of course, we know Singapore birth rate is getting lower and lower, right? The young people have a very different view about marriage, all right, or even getting started.
Yeah,
all right,
correct.
And we also know, right? You want to start a family, I think the fundamental thing is this: the air you breathe is free, okay. The roof over your head. Yeah, it is. Yeah. Hopefully, good air, not from Indonesia when the haze was filming. Okay. Other is free, okay. But the fundamental thing is the roof over the head, right?
Yeah,
we tend to take for granted in Singapore.
Okay. Yes.
And if the young generation, right, having this kind of concern, I was totally surprised when you said that some of them even worry that they may not even be able to own a property, right?
Yes.
Right. So maybe before we wrap up, Alan, can you just take maybe 5 minutes to just expand a little bit on this part? Yeah.
Oh, yeah. What happened was the project that Samuel talked about is between the association that I serve together with the MCCY, the ministry that take care of the youth, right? So youth meaning to say the age 15 to 35. You can be married or not married, doesn't matter. The 35 one could be married. So that's what I mean by youth. Yeah. So the National Youth Council actually did a data study with data or research. All right. What are their financial planning concerns? Two implications that struck us. All right. So that's why they approach the association to want us to come up with certain content in terms of financial planning. Two issues. One issue is that the youth, they actually don't like roadshow. They don't like to be approached in the roadshow. They find it very distasteful. They use the language that they use, they describe it actually is very bad. All right.
Yeah. So, very English, I would imagine.
Yeah, it's quite bad. It's almost like a four-letter foul language, that kind of thing.
Yeah, all that's why I say.
So they don't like the roadshow. Okay. But yet again, inside their heart, they're yearning to have good financial planning advice. How do I build my financial plan? How do I build investment plan? Or what exactly is insurance? They want to have that kind of people in a very non-threatening way to tell them the truth without sugarcoating. And one of the concerns is that they want to own a house, but they really feel that they might not be able to afford. So therefore, my association, myself, we did some research and then we come up with certain content. All right. In Singapore situation, in order to own a house is not impossible. All right. But the issue here is that what sort of expectation you set for yourself. All right. Yeah. And then you got to start saving it. All right. And if within certain number of years, say 5 years or 6 years, you can't save that money enough for that down payment, perhaps you will do some financial planning. Maybe you have to arrange with a talk with your parents. All right. Are they able to help you finance it? But you must return, you must return that part back.
And that is the part, right? That is the part because a lot of parents may not even be aware. I am one of them.
Yes,
right.
Correct.
And after I hear what you say, it brought me to think about my children. Right, they are young adults right now. Yes. Years to come, they will be thinking about the same thing. Right. My eldest daughter is like about to finish her university. Okay. And of course, she's looking at starting her own family and all that, right?
Yeah, correct.
If they cannot afford, what is the implication for people like us, the parents who are going to retire? That become a consideration for part of our retirement planning, isn't it?
Correct.
Right? Somebody got to
It's-
provide the roof over their head for them.
Yes, it is interlinked. No, the
It's
property
interlinked, yeah.
situation, as much as you can say, is an emotional topic. I agree to a certain extent. But the thing is, it can also have some sort of hard data to come into it to help the client to make better decision, to make an
Yeah.
informed decision.
Yeah.
I'll give you an example. Just give you a live example. I mean, my house is put on sale. All right, me and my wife, we tried to put our property on the market. All right, to sell it off. Guess who are the people that come and see? We're going to have a show flat, showroom, show flat. Who are the people that come and see? Wow, the age group, I thought was middle age. No, some age group come inside are very young, 28 years old, 25 years old, young
really?
couple, no. Then
Okay.
I asked them, hey, what job do you do? Wow, you so solid. Your first property, you buy private property. Well, I say, I'm banker, some top very big. All right, here. So I begin to see that, in my days, the first property that we had is HDB, But in today, I see a young couple come and see private property show flat. Meaning to say that, how come you don't want to explore HDB? Maybe they got this conception that private better than HDB, or I want to enjoy
But in this case, this couple can afford it.
Not necessary.
Not necessary. I'll just come and see. Maybe
Come and
after
see,
that, go and talk to their parents.
No,
Right?
maybe some of them, because maybe the lady, maybe they need to get married very fast. Otherwise, the stomach of the lady getting bigger by the day, then problem, you see.
Yeah, that's one thing. But maybe
that kind of situation.
their parents can help. Right?
Perhaps. But the thing is, with hard data, with some real expectation of how much you need to set aside for certain number of years. I think you target certain housing, certain property. If you really cannot.
That means to say, the margin for young people these days is really not the way the same as the margin of error, so to say, in our days. Like let's say we just graduate. Right.
One thing is a fact. I'll give you an example based on data in Singapore. If you want to own a flat by your own means in Singapore, after graduate, you earn decent income now. You got to save for 7 years. Just give some perspective. In South Korea, so you got to save for 15 years. In Tokyo, Japan, probably you got to save for 17 years. Then you can have your first house.
2 person, one person.
No, one person.
One person saving.
One person.
Okay.
Samuel, in Hong Kong, you guess the same parameter you apply in Hong Kong. Yeah. A graduate just graduates at age 25. How many years you need to save in order for him to own a decent house in Hong Kong? Samuel, you try.
I don't know. Okay, I know a lot of people in Hong Kong don't own them. They rent.
Let me tell you the answer. The answer is infinity.
Infinity.
That means you cannot afford. You're out of the game.
Okay.
That's why the youth in Hong Kong, you find it so frustrated. No, they say that, no matter how I work, I also cannot have a decent house. Get a decent house, which woman want to marry me? Very difficult. So I got no future. I see no hope. So if anybody want to instigate, say protest, I join in. I got no hope with him. What you want me to do?
Yeah.
That's the part. I join in. I'm not happy with you. This is what you call social frustration. So property cannot play on.
Yeah.
Therefore, in Singapore situation, it's still manageable. Though it's expensive, I must consider the fact it's expensive. Yeah.
It is expensive, but it's doable.
Doable. If couple come together, have a serious target, say 5 years, couple together.
But that provided, Alan, financial literacy.
Yeah, of course.
Right, is good, you're assuming that it's good, that means majority of your people graduate, they know they need to save 7 years before they get their property, the moment they start, they start to save, right? Then it's 7 years. If you don't, then maybe 10 years or more, right?
Problem.
Again, of course, back to the role of financial planners, right?
Yes.
Financial advisors are actually the ones that are well poised, okay? And I think this is very interesting and important to me, okay? Because, there are things that keep you up at night. And there are things that keep me up at night as well, right? Tell me what keep me up at night, right? The role of technology, because as a technologist, this is what I track more, right?
Yeah, correct.
How that's going to, would they replace the financial planners or not?
Yes.
Would they replace the financial planners? And today, the market is still like that. Insurance is a product that is sold no more. That means people are not going to call you, hey, Alan, I want to buy insurance. Okay. We still need the financial advisors to go out there proactively to engage the consumers. Am I right or not?
Yes.
But then now, if the financial advisors are armed, right, they are endowed with this kind of knowledge, right? Then it is very, very good, isn't it? They are really able to add so much more value to the
Of
market,
course.
right?
Yes. Yes.
Bankers may not do that, right? Investment bankers may not do that, right? So I think yeah. So Alan, thank you so much for this session. We kind of stretch a bit, but then again,
No problem.
this
Yeah.
session managed by me, I can allow it to stretch. No
Okay.
problem. Okay.
Yeah.
So
Right.
we have actually touched on many interesting topics, right? And so guys, we will continue to update the description segment of the videos, right? Sometimes we may link to each other, right? So please keep a tab on that, right? And in the description, we will talk about I will update it and talk about the third segment or installation of this HQ financial planning conversation with Alan Lim. What is the topic that we're going to talk about? So much for now. So I wish all of you, right, to continue to stay safe. Alan, especially you as well.
Okay. Thank you.
Stay healthy and safe.
Okay, good.
Be
Thanks.
a good boy. Be a good boy. Okay.
So are you?
Okay,
Okay,
fine.
okay,
Okay, take care, okay, bro.
Take care.
Okay,
Okay, bye bye.
I'll see you again.
Yeah. Okay. See you.
Okay,
See you again.
ciao.
Okay. Bye bye.
Bye-bye.
Ciao. Bye bye.